minds think alike. Great Minds Podcast. Great minds think alike. Great Minds Podcast. Great minds think alike. Great Minds Podcast. Great minds think alike. Let's rock. You're now tuned into the Great Minds Podcast. You're now tuned into.
All right, welcome to the Great Minds Podcast. This is Derrick.
This is Vaughn.
We're here with Luke Partico. What's good, man?
Luke.
Good. How are you?
Good, man. So just a brief introduction. This is a longtime friend of mine since 1995. Wow. So it's been a minute. We've connected since then through various things. Today we're going to talk a lot about the stock market, music, some sports, a lot of different things, and just kick it. So we had you on. Like stocks are like a huge thing right now. Me personally, I think it's because people have more access to it, like through the phones and things like that. They don't have to go to like a broker and, you know, all that stuff. I don't know how, you know, if you agree with that part of it, but it's blowing up. It's a big thing. So we wanted to get you on, and appreciate having you on, man.
Appreciate you. Man.
Appreciate you guys having me on. Love the podcast. Listen to it. You know, as soon as it comes out Friday morning, I try to catch some of it on the way to work.
Yeah.
Love what you guys are doing. Love the content. Love the guests. Variety is crazy. It's always enjoyable.
Appreciate it.
Appreciate that. So I guess give a little bit of like, you know, your background. I've known you from like doing music, and I know you from like being a music lover and, you know, fantasy football lover for years. So we've been on the same wavelength, and we have tons and tons of text messages for various things just over the years. So what got you like just going into the stock market? Like what got it rolling for you?
Yeah, you know, I was never really into it. I don't come from a family that ever did any of that stuff. Nobody really talked about it. You know, I remember vaguely something in like 99, someone came to the house trying to sell them mutual funds or something. You know, it was all sorts of crazy. My parents had no idea what they're doing. I think they ended up buying something, losing some money. You know, that was the days of, you know, the 90s where, you know, some stocks were going up like crazy, not too dissimilar to what's going on today. And then, you know, it sort of didn't end well. After 2000, they call it the .com bubble burst or whatever, all those stocks that were kind of attaching .com to their names, all these companies, and the stocks were blowing up. They were, you know, IP having an initial public offering, which what that means is just the first day of trading. They would start trading at $20, and before the end of the day, they'd be like 100. Mm-hmm. And, you know, people were like quitting their jobs and leaving work. And, you know, I had no idea any of this going on. You know, I was 99. I was a senior in high school with Derrick. I was like, you know, listening to Rough Riders anthem and making beats in the basement and just kind of hanging out, you know, getting ready for college. I had no idea about stocks. Same thing through college, you know, and then around 2015 actually, a mutual friend of Derrick and I from high school named Matt, who played basketball on the team with Derrick. He introduced me to stocks a little bit. He was big into like markets. He's like he did like a math finance type of stuff in college, and he works as an actuary, and he was always fascinated with that kind of thing. I had no idea what any of this stuff was. And a movie came out called The Big Short. Yep. And sure you guys heard of it. Yeah, with the, you know, Christian Bale and Brad Pitt's in it, Steve Carell, a bunch of people. Anyway, and you know, he asked me to go check out that movie. Him and a couple other guys went, and I had no idea what it was even about. And we kind of went. And then afterwards, I was kind of like, I didn't understand 90% of what's going on in the movie. They're talking about mortgages, like collateral debt obligations. I'm like, what is all this stuff, you know? but the story was kind of cool. So afterwards, we went. I'm sure you guys know Menlo Park Mall. We went to like the Fox and Hounds around the corner, got some wings, and he started explaining to me kind of like, you know, this is how the market works, and, you know, this is what these guys were doing. And I kind of found it fascinating. And then he started telling me, he's like, you know, like right now, oil prices are going down, and like, you know, I'm like shorting these oil stocks and all this stuff. And he had just like made a killing. And, you know, like most people you hear like, oh, you know, my buddy made a killing on this and that. You kind of want to know, hey, what's up? Tell me, like, you know, how to get into this.
What's going on?
We'll see what's good.
Yeah. Let's see what's up. This guy like made $8,000. I'm like, from what? From clicking a couple buttons?
Right.
So, you know, and of course it always sounds easy, you know, but it never really is, because you know, nothing is really easy. So anyway, so he kind of got me into it. I started listening to him and following his advice. And, you know, quickly within a couple months, I realized I didn't know what I was doing. I blew up an account, lost a couple $1,000s, didn't feel good about it. And, you know, kind of took a step back and said, no, I have no idea what's going on here. I'm not sure Matt knows what the hell's going on here. But that was the start of realizing what a stock was, what an ETF was, what any of this stuff was. I mean, I was like putting away stuff into a 401k with work, and most people do that to some extent. And I had no idea what I was even putting money into. So,
right.
At that point, I kind of decided, well, I'm gonna try to figure out what the whole thing is about. I took a couple months off, got some books, started studying and read up on things, and since then things have kind of changed, and it's become a passion of mine, sort of the way fantasy football was for many years, and you know, other interests that I've had over the years that, you know, I still have to this day. Music, I still will occasionally make music every now and again. I'm good friends with another mutual friend of Derrick and mine, Vertical Jones, who's been on the show. So, you know, we always talk music, and I'm always checking out his stuff. And, you know, he was an early inspiration in terms of doing some musical stuff too. So, you know, stocks kind of were added to that list of things that I was, you know, I consider a hobby.
It's funny, Luke, that you mentioned the 401k aspect, because the first time I started noticing stocks is when I put money into a 401k fresh out of college. And I did that, and I saw all these different terms that I didn't really fully understand. So it was kind of like you set it up and you put your whatever 4, 3, whatever they're going to match, right? Whatever they're going to match.
Mm-hmm. Yeah,
and you
basically.
put it in there, and then they run it for you. So I didn't really pay attention to it. I would see the money grow and things would happen. I'm like, all right, this is great, but then not really understanding it. But once I started seeing it on my phone, you know, where they start giving you stock updates on your phone, like, I'm not sure everyone knows about that, but pretty much Apple has an app, it's automatically, you don't have to buy it. It pops up. You can add things. So I'm seeing all these different like stocks going up. I'm like, all right, this is where my money's going. So that made my antenna rise on it. So I think it was more like we were all in the same boat. We didn't understand what the heck that really was, you know? And then we were like, all right, do we want to gamble with that? It's kind of like lottery, right? You're like, all right, do I want to lose money in this or do it not? But you gotta be not afraid to lose. So how's that go about, you know, not being afraid pretty much to take a loss here and there?
Yeah. So I think that comes with time, and it comes with experience. Like I said, when I first started out, I had no idea what I was doing. And after I was quickly handed, you know, a loss, I kind of took a step back and said, okay, I really need to learn what I'm doing here. I can't just, you know, randomly take tips from people and figure things out. And I'm one of those types of people that, you know, I love to sort of go on a quest, a mission, you know, to better myself. I'm a sucker for bottom to the top type of stories. And so I just decided that I really need to learn how to do this. And over time, you know, the losses, if you are responsible and you know how to manage the risk in your investments, I think over time it becomes a part of the process. And as you get into different types of trading, actually, you know, losing is so much a part of the process that it's you know, you almost have to lose to win, right. Especially because, you know, in you know, there are stocks that'll go from, you know, 20 to 100, right? But and there are stocks that'll go from 20 to, let's say, 15. If your money's tied up in the stock that's going down, you can't participate in the other stock. You know, I'm just, of course, simplifying it as if you're investing in one stock at a time. But you know, if you're in a bunch of stocks that are doing nothing, you know, there's a time value to money also. And so it's better that those stocks just kind of knock you out. You take the small loss and you move on and you get into something better. And so that's just something that I think the comfort of, I mean, you never really like it. Nobody likes to lose, right? Especially, in the stock market, you end up being wrong a lot of the time. And I think as, people you going through school, you just used to trying to get the right answer every time. It's a different game, really. It's a game more of probability. So, that you're gonna, you'll maybe get 50% of your stock picks, and that makes you excellent, actually. But if you're losing stocks are only losing you, $100 per stock, but your winning stocks are making you 500. That's
Still
like
winning.
a casino. I mean, it's just the odds, right?
Right.
So I think if you have a good process in place, that's just something that's part of the process, part of the game.
Yeah.
Okay.
So I got into stocks this summer. I'm gonna tell a story. I don't even know if I fully told Luke this story, but we decided to link up. I called him and said, let's link up in the summer. You remember the conversation we had. And I thought he was gonna just pull up like, yo, these are 5 stocks you should get. Talk to you later, man. You know what I'm saying? He pulled up a different spreadsheet, types of traders, type of, like, I was like, oh, all right, like, this guy's like the real deal. I thought he was gonna be like, oh, here's 3 stocks that you could get. You ready for fantasy football? I thought it was gonna be that type of deal. But what I will say is, in my short time, I've done pretty well. We text back and forth. We've had, we have a lot of the same stocks. So we have, like, I've had some high highs, and I've had some lows. I mean, there was a day I remember particularly, I don't know, I might have lost. In hindsight, I wouldn't be as upset because, and we'll get into the type of money you think that people should be investing anyway. But I think I lost, like, I don't know, a couple $100 in like 10 minutes. Like, I had to take all my money out that day, not out of it totally, but like in the timeout area, and just let it breathe for a second. Like, I remember that day, but Luke's always like, yo, it's just part of it. You know what I'm saying? So now I see it because I've seen, like, the upside of it. And it's really just like, looking at what you made over the month, looking at what you made over the past 3 months, because it can be a day where it's like you make $1,000 and then, like, you lose 500 the next day. You can't forget about the 1,000 you won. Some people.
Absolutely. Yeah. It's a long term, and as you stretch out that horizon, you really, you realize that it's all about percentage gains over a longer time frame. Right. And I think this is where we had kind of talked offline a little bit about what we would discuss today, and we had talked about the different types of traders, and I think this is where this is a good place to sort of have that discussion, because there are different types of traders and different types of market participants who have completely different time frames. So you have people who are just long-term buy and hold, typical 401k type of investors, people putting money into IRAs, people just automatically doing it through work. There are people that do it, never look at it. They have no idea what they even have in their accounts. And of course, there are people who are also longer term that way, but they take a little bit of an active role. They'll look, they know that they're dollar cost averaging over time. And I think Derrick and I were looking at a long-term chart of one of the indices, the S&P 500 or the Dow Jones, the NASDAQ, whatever you want to look at. In this particular one, we were looking at the QQQ, which is basically an ETF on the NASDAQ 100, which basically is like, it's more weighted towards technology stocks. So it's been particularly good over the last decade. And, Derrick was looking at it and saying, this is kind of slow and steady. He's like Frank Gore at the end of 10 years.
That's what I called it. I was like you got some stocks that, like, and we always equate it to, like, football, basically.
Sports,
yeah.
I'm like, yo, this guy is like, this QQQ is like Frank Gore. Like, it rarely, like, takes off on you. But, like, when you look at it over a longer term, like, yo, this dude's a Hall of Famer. You know what I'm saying?
So quick question just to add about that before you finish, Luke. So when you saying the QQQ, I know a lot of people listening, I know what it is, but a lot of people listening don't really know what these acronyms actually mean. So QQQ. Yeah. So what does that actually truly stand for?
Yeah, so anytime you hear these abbreviations, there's basically each stock has a ticker, right? So, for example, Apple as a company trades on the stock market. It has a AAPL as its stock ticker, Tesla, TSLA. And so each stock or basket of stocks, because that's what QQQ is, it's essentially a basket of stocks, has a ticker. So that's if you want to put in a trade on your brokerage app. You know, most people in the younger demographic are using Robinhood, and so if you want to put in a trade, you're going to type in the search. You're going to hit search. You're going to put in QQQ, and it'll bring that up as a type of stock that you can put into. That one happens to be something called an ETF, which is exchange traded fund. You know, it's a lot of fancy terminology, but it's relatively straightforward stuff that, you know, if you do a little bit of a dive, you'll have an idea of what's going on with these things. Yeah. So QQQ is basically like 100 companies in a basket, basically. So you get like, you know, Apple comes in that basket, Amazon, and so forth and so on. So QQQ is one of these things where, you know, over time, these companies have done well. So that particular ETF, if you're buying shares on it, over time, you tend to do well. So that's kind of like a Frank Gore type of stock. Then you have
slow and steady.
Yeah. Then you have, you know, your and the name's not coming to mind right away, but you get a stock that, like, you know, it's hot for like a season, and then, you know, then it kind of fizzles out.
Arian Foster.
Yeah. And then it breaks your heart for three straight seasons. Yeah. So you know, the stocks, going back to like the types of traders. So like long term, the passive kinds of people make up a large chunk. There's position traders, which I would consider myself. Derrick is kind of in that realm with me. You know, you try to look for good companies. Derrick and I have been talking about Peloton. There's a lot of, you know, strong tailwinds behind at-home working out because of COVID. A lot of these, you know, a lot of trends in general have changed or have been accelerated by COVID. So a lot of companies have, you know, stood to benefit from that. And so naturally their stocks went up in price. So there are these position traders. You buy these companies that you think are going to appreciate in price, and you try to hold them for, you know, however long. You know, there's a process of getting into these things and getting out of them. Then we have day traders, who are people who are literally just sitting in front of their desk, clicking away, like buy in the morning, sell in the afternoon, or, you know, try to buy a breakout. And then, you know, as soon as the stock's reversing, they'll be selling it. And then there's a fourth type, which is kind of like a new thing, I guess, over the last few years, that, you know, they call them the YOLO traders. And it's people that are basically, they're YOLOing. I mean, they're just like load up their account, you know, basically take a stimulus check, load it up, and they're firing away. I mean, they're buying things that are, you know, highly leveraged, buying things that can go up, you know, 10x in a week, and hoping to, you know, catch a quick, you know, lottery ticket type of investment. I don't know if you could really call that an investment, but yeah, so there are those types of people too, and we can get into it if that's something of interest. You know, talking about the GameStop thing, which I think has been on everybody's radar lately. I think that's kind of like brought a lot of attention to the stock market of late. So those are the four types of traders. I agree with what Vaughn said at the beginning about, you know, I think there are a lot of new participants coming into the market, which I think is a really good thing, because, you know, first of all, over time, you know, the stock market tends to go up, and it's essentially a tool in an arsenal of tools to you know, to better yourself, to better your financial situation, to better a situation for your family, kids. You know, our retirements are tied to stocks. In many ways, people have education plans set up for their kids, you know, 529, various things. So many things are tied to stocks. I think it's an important thing for everyone to at least have like a basic understanding of what's going on with it. And thanks to, you know, a lot of the apps, you know, Robinhood talks about democratizing finance. You know, they try their best to do that. And the fact that they're giving you, you know, essentially low cost or no cost in the case of Robinhood trading, I think is a big deal. I mean, not a lot of people know, but, you know, in the 80s and 90s, if you wanted to trade, you'd have to call up a broker. They charge you $100 to get into a trade, $100 to get out, and you're losing $200 just to get in and out of the position. So, you know, obviously that was not a setup that was conducive to a lot of people getting into stock.
Wow. So what do you think would be, if you're going to build your portfolio, right? And everyone knows how you should build it and things like that. You shouldn't all have all your eggs in one basket, of course, right? So what's
Yeah.
the outlook for someone new coming into stocks and just seeing it? And is it look at what you currently use, look around your house, you're using this, using that, like invest in products that that you actually like, is
Yeah.
that like what's your thought process around that?
Yeah. So, there was actually, to the point you mentioned, there was a book written back in the day that just talked about how, if you just invest in what you own and what you see, people, this particular fund manager talked about, he would, go to the mall with his daughters and see what they were buying. And that's how he sourced his ideas. So, I think there's a little bit of danger to that because those, uh, you might be walking around the street seeing a bunch of Ford cars, and that might not be a good stock to own. Ford is the stock that has not been the greatest investment over the last decade. So I think there's a little bit of danger to that. But in terms of sourcing ideas, figuring out if this is something I might want to look into, definitely great place to start. Derrick and I, we talk about Peloton as a stock, Zoom as a stock. It's a stock that's performed really well. Things that are going on in life, there are certain tailwinds in certain industries that will help certain companies and help their stock price appreciate. So that's a good point to kind of think about what type of things I might want to look into. But then, there's a little bit of a process. I mean, it's not that straightforward. You want to look at, I think before you even get into, looking, deeper into individual companies or stocks, I think you first and foremost have to decide really the type of trader you want to be. There are plenty of services on the internet, and I'm sure you guys see this all the time. YouTube ads, if you ever click to look up a stock thing, all of a sudden there's some dude sitting in a Lamborghini, he's got like, drinking champagne and talking about how he made, 50 grand in the last 5 minutes. And, of course it's all promo, and these guys, most of them are not really trading money and just sort of selling hype. Unfortunately, that's a kind of a nasty part of the industry. Anyway, so, you have to decide what type of investor you want to be. Do you want to just invest into index funds over time, slowly contribute money? And I think for most people, if you're not really into it, if you don't, it doesn't excite you, doesn't really move you in any way, that's not a bad thing to do. Pick a couple of the stronger ETFs or just S&P 500 index fund. They're low cost. They charge you barely anything in terms of a fee to purchase them. Cost nothing. So, you can set up a program where every, couple of weeks or once a month, you contribute a little something. And over time, that adds up. And it's sort of like, instead of, the problem is nowadays we have no interest rate at the bank. Back 10, 15, 20 years ago, our parents would put some money in the bank and, at least they would get some kind of return on it. Nowadays, right. You're not really getting anything. Yeah. So, the fact that those dynamics have kind of pushed people to like chase returns, and, then that's across the board, from individual, retail traders to institutions and money managers. They're all looking for the same thing. So first and foremost, you got to decide what type of person you want to be. If you're really into it, I would suggest, doing some kind of position or swing trading where you do a little bit of a deep dive on a company. You look at a stock chart, maybe you get a little background knowledge on how things work, and you decide to purchase a small basket of stocks. Usually around 12 stocks is sufficient enough to give you good enough diversification to the point where you're not really exposed to the risk of one particular stock going down. So that's another way to go about it. And of course, if you have all the time in the world and you want to sit in front of a screen, I guess you could try day trading. But most of those people over time end up losing money. It's just it's a tough game to beat. You're competing against machines and really sophisticated algorithmic traders. So that's not a game that I particularly would recommend to anyone.
Yeah.
Definitely.
It's like you trying to outrun Arian Foster in a 40-yard dash.
Prime, right?
Not prime.
Nah.
Yeah.
Even now, I don't want to touch that.
Word.
Yeah, even now, you don't want to touch that.
Can you touch on like any advice you have, like what money should you be contributing to this type of activity? Because you told me what money should be invested. Can you just explain what money from your paycheck or whatever you have you should be investing, or your recommendation, I should say.
Yeah, yeah. Well, I definitely. So I don't want to make any recommendations because I can tell you that it all varies from person to person.
Yeah.
There was a long time period in my life I was going through training, and I didn't have that kind of money. And it's very up to the individual. There was a time period where I just needed to pay the rent and get the bills in on time, and there wasn't much left over at the end, and also you're young, you want to go out with your friends. Stocks? What are you talking about?
Right.
So I remember even back then, someone was telling me, oh, you need to be putting away money, and I'm like, get out of here. Yeah, it varies from person to person. I would say what Vaughn mentioned was really good about the 401k, you getting the match. That's free money. That's 100% free money that you are otherwise not going to get, right? You're not going to get a free 100% anywhere. So if you take that, 3-4% match, whatever it is, and your company gives you the match, yeah, I mean, that is a no-brainer. That's one of the few no-brainer things. And they made that incentive so that people would save for their retirement. The government, they like to mess with the tax code and do all this stuff and make these rules and loopholes to try to get people to do whatever they want them to do. So they want you to invest for your retirement. So they're like, okay, well, we're going to
give you the incentive.
We're going to give you the incentive. So they let companies match your 401k. So I would be doing up to whatever the match is.
Gotcha.
And then beyond that, it's whatever the individual is comfortable with. If you're comfortable putting away anything extra, out of a paycheck, and small amounts over time grow into big amounts, especially when you're talking about compounding at a rate of 6 to 10% per year, which is what stocks do historically. And for that type of person who just, doesn't necessarily want to be looking into it, checking up on prices, they have other hobbies, other interests, other businesses to run. That's a good way to go about it. Put away a small amount, each week. Over time, what you do is, it's called dollar cost averaging, where you're basically just buying at, whatever the price is when the time comes to put in your money for that particular month. And over time, you end up getting sort of an average price of, stocks are doing this, and you're putting in a little here, sometimes here, and you end up getting the average price. But over the long term, the stock market tends to, move up and to the right, and so over time, your money will appreciate.
Right.
It's funny you say that, because I'm going back to my thought process with stocks in general. I was fortunate to have older people around me that kind of told me certain things to do. So when I was about 22, right before I graduated college, my dad said, start your 401k. I'm like, what? I'm 22. I'm not thinking about 401k. He's like, no, do it. Match it. Whatever you do it. And I'm like, all right. And he was from the mindset of, stay in one job forever and stay there forever and ever. I'm like, that's not going to happen, but whatever. So I did it. And then I had a manager who was kind of like a mentor, who kind of said, all right, Vaughn, so I'm going to show you what to do. He's like, I don't care where you go, match it. Right? And he said this too. So now I'm hearing it from my dad, who, of course, you trust that, but from someone that, another person telling me that. So I think as you get older, more, right? So I think a lot of people is ignorant. They're ignorant to the idea about stocks because no one's telling them about it. So I personally feel that always start with the 401k, whatever it is, whatever it's called, 401k, 401, whatever it's called, different terms for, for every industry, right? But I also think if you start with that, as you get older, as your life changes, you look at things totally different. So you might be able to put more when you're in your 20s than you might be able to do in your 30s, because maybe your 30s now you have a family, you have kids, and you're kind of like a little skeptical. But at that same time, you're probably be making more money in your 30s than you make in your 20s, hopefully. Right? It's going to happen. You make that more money, and then maybe you might start investing differently. And then, like you said, you start looking at different things. You have your, the spreadsheets, you know what's going on. In your 40s now, you're really hitting it. So now you really know, so you can kind of leverage certain things, because a lot of people, they get a 529. And the thing about 529 for my kids, I didn't get a 529 because when I was going to do it, it was just for school. So, I'm like, all right, I don't know what my child's going to want to do. Who knows? And I'm like stuck there. But if you take that, what you're going to put in that 529 and invest it in the stock market, right? Just say, I'm not telling anyone to do this. This is my thoughts. If you do that, who knows by the time your kid is 18, what you're going to have in there. I think a lot of people don't see it that way. They think about the safe way. I've been told to put it here. I don't want to look at it. Let it just work. But you could be selling yourself short. So I think people need to put something in somewhere, some type of 401k or anything to kind of test it out. I think if you don't, you're doing yourself a disservice.
Yeah, absolutely. Just for the match, if nothing else, because it's a free 100%. And I love the point you bring up because, you had mentors that guided you to put money in there, and now you look at things when we're all sort of in the same demographic of turning 40 or 40, and you look over time and you see how much that has accumulated. And you really appreciate the power of that long-term compounding. I think that this is really beneficial, what's going on with stocks. Even some people are going to get into it. They're going to be the YOLO traders. They're going to lose money. But I think long term it's beneficial because they're going to be exposed to the market. They're going to see, and probably a lot of these people will say, okay, let me take a step back. I lost some money, but there's a better way of going about this, and they'll go back to the drawing board and try to figure it out.
Right.
Yep. Definitely.
So, before we move on, I just want to touch on your thoughts on like crypto and all that.
Yeah. So crypto is very interesting. I have bounced back and forth between being a skeptic to believing in it, to being a skeptic to believing in it. Right now it's the hot thing. It goes through cycles. I remember when Bitcoin was going through its crazy run a couple years back. It's an interesting thing because right now, I think what the argument against crypto was for a long time is that, it doesn't have any kind of, intrinsic value. It's not backed by anything, and of course, the crypto believers will say, well, what's the money backed by? What's your dollar backed by? And they'll say, well, backed by the government and a lot of guns, I guess.
Definitely.
But basically, right now, a lot of institutions and big companies are getting into a PayPal, Square, and so forth and so on. So, a big argument for a long time was that, the government's going to outlaw it or limit it, and it's going to, go to zero, and it's a scam and this and that. And I think that probably the chance that it gets limited or outlawed, that ship has probably sailed now that all these big companies are getting into it. Banks are, buying up Bitcoin, and, the technology behind it has a lot of uses. And, there are going to be winners and losers that come out of this the same way that in 2000, we got Amazon come out of that, right, as a big winner. And, Yahoo sort of barely survived, but you're going to have plenty of things like pets.com that just don't, they're not around anymore, And so I think in the crypto space, you're going to have things that are going to survive. And there are obviously a lot of sort of, crappy coins that are worthless, and people are just using them to speculate. And so it's tricky. It's a broad topic. It really could go, you can take many different paths, in discussing crypto. So in general, I think, right now, I think people putting a small amount of their worth into, one of the reputable cryptocurrencies, Bitcoin or, Ethereum, I think is not unreasonable. I mean, speculating in Dogecoin or whatever, I mean, that's in risk, I guess.
Yeah.
Right.
I saw something, I believe yesterday on the news. It was stating that they did a trial run in China with crypto. So what they actually did was they basically said, okay, the government said, okay, instead of giving like debit cards or anything like that, we're going to put this money into an app or whatever. I think it was the equivalent of like $200. And the people were able to use this, shopping, whatever they were doing. And I think they said they ended up spending, and don't quote me, this like $30 million worth of that crypto, right?
Wow.
So they were saying that, all right, this is showing that it can happen. I think it's a town in like, I think maybe by Amsterdam that they just do strictly cryptocurrencies, what they use. Mm-hmm. And they were saying that this could be done, but it's so much into the institution of banking in America that they don't know if they want to mess with it too much, right? Because they don't want to disrespect the Chases and the Bank of Americas and all that other stuff, and PNCs, and things go crazy. So they might not, as you stated, go all the way in on it, but they can't shut it down.
Yeah, there's definitely a lot of roadblocks to like widespread adoption, but I think there's a lot of people who talk about possibly government adopting digital currencies. I think that's probably fairly likely. It makes it easier for the government to, to track the money, know where the taxes, who's paying who. It's, I think it's a very attractive way for the government to manage money, and so I think it's probably a foregone conclusion that at some point some government is going to adopt a digital currency on a wide scale. So,
and another thing that I was skeptical about, but I started looking into, is cannabis and cannabis stocks. So I started looking into that more and more and more and more, ringing up on it. So how do you feel about those stocks?
Yeah. So look, again, there was a craze, like with many other things. There's crazes, the blockchain stocks, the pot stocks, this and that. Again, there are going to be winners, there are going to be losers. If you can pick the good companies, not giving any financial advice here. Recently, there was a company called Growth Generation that has done really, really well. There's companies that have, had crazy run-ups and then crashed down. Tilray is a fairly famous one. I think, it's a legitimate business, with legalization, across the country. And I think that, if you want to invest in good companies in that space, I have no problem with that. I think it's a very reasonable, investment as part of a, larger portfolio.
Oh, I bought a little bit today. So.
Yeah. You testing the products out too?
Nah, I'm testing the products out.
I was talking about Cannabis the Rapper.
I did a safe one. I did a safe one.
Oh, wow. All right, let's transition a little bit. So music, what do you got going on? I think we all agree, and I don't know if this makes us an old head or not, that the 90s
pretty
are
much
golden era. 90s are the
old
golden
head. We're old heads, man.
Yeah, I guess we gotta.
Whenever I hear you guys talk about old heads on the podcast, I'm like, that's me. I'm not even trying to deny it.
It is what it is.
It is what it is. I was driving back from Florida this weekend. Other than listening to the Numbs album, I was listening to everything like pre-2000.
Right.
I am an old head in every sense of the word, man. I was listening to DOS Effects, Lords of the Underground, Big Daddy Kane, Warm It Up. Yeah, that stuff is the stuff I grew up on, and I think there was an era. I know you guys went through your top albums. I love that episode. I love that episode. Listening to Ready to Die, and I know Derrick. I think your number one is Life After Death, right?
Yes. Yep.
Listening to that on my drive. These are classics,
right.
And it's hard. One thing I was, there is good new music. I'm not going to say
of course,
not.
Yeah.
It's just not.
Certainly.
It doesn't hit me. I think Joel Ortiz, there is this verse he has on a Captain intro where he talks about people on the radio are mumbling. And he's like, these bums got more money than me. And it's
right.
like, so staying complex is a struggle,
Yeah, it's a fact.
Yeah. And so, for older guys like us, when people, we're used to hearing lyrics and content and some of the music, like you guys always talk about Griselda and you guys have had Shay on the show and Ransom and, there's still people putting out good music.
Oh yeah.
So, but you have to be looking more into that. You have to be sort of in that niche because it's not something that's just going to come across your desk.
No, not at all.
Exactly.
Yeah.
Well, that's why I'm sending you stuff all the time when I get it, right?
Exactly. Because if you're not digging for it, you're not going to hear it. So, I'm still very much into the classics, and that's usually what the rotation is. And not just hip hop, but I'm fairly eclectic with my musical taste. Everything. Part of the reason why I love Aquemini so much, I know Vaughn and I are on the same page with this, is because it's such an eclectic album. The range on that album is just is crazy in terms of the type of instruments and the type of styles of the songs. So yeah, I'm very eclectic with the music. You know, Vertical Jones will give me suggestions, and you know, he can go from U2 to singing to gospel to you know, everything. So
yeah, he got a bag for everything.
yeah,
What's
he
crazy?
does.
When you
And
get a chance, Luke, when you get a chance, and I tell everybody, you have to watch that new Biggie doc on Netflix, right? So I watched
okay.
the whole thing. I watched it, and something that he said, he basically said to his mom, "Don't listen to my music. It's
Yeah,
not for anybody under 35."
yeah. I
Yeah,
heard
Right.
that, and I was like, I was like this. I was like, my mind was blown. You
but
know,
see, he was what, 20 at that time? He probably said he was 22,
right?
23. He's
Mhm.
like, don't listen to. So it made sense. So that's where we fall over it. And then you saying, as far as the eclectic sound, he basically, and they were saying how he wrote his rhymes was very melodic, and in a pattern, like the structure was totally different, like he was writing love songs, like
Mm-hmm.
a R&B singer or something like that. So that's why his flow was so different. And he had the Caribbean background, and he
Yeah.
had the jazz background. And who, like Scott Zoo told us,
Gazoo said, yeah,
he was saying I rap like in like a jazz pocket, and that's how he was
a
doing it.
trumpet. He
The
raps like a
trumpet.
trumpet. Yeah,
And they were
Yeah.
saying that most great rappers are the greatest. They have different kind of pattern like that. So he was very eclectic with his music. He never listened to rap. He listened to nothing but oldies. So,
Mhm.
you know, it's always funny when you hear that these great rappers that didn't listen to rap like that. Like, I mean, besides themselves.
right.
So,
Yeah. I think that's important. You hit on an important point. I mean, I think the cadence is of the rapper is so important, and I think, and some of those, like the greats like Nas and Jay and Big, they had a cadence that is, you know, really unparalleled. And the thing with Biggie is, you know, he could do like, you know, a slower beat. He could do Notorious Thugs. He can do, you know, his versatility was incredible,
Right.
and just always on, and the cadence is so perfectly crafted. I mean, genius stuff. And you know, like I said, I'm an old head, so I think actually, you know, when I was listening to Big Daddy Kane, he was kind of like that too. And
yeah.
you know, yeah, a lot of that goes. It's very underrated, that particular facet of the hip hop.
Right.
Definitely. Now, what were you going to say now?
Now I was gonna ask him about sports. I don't know how much you've been. I know you haven't
Man,
been totally locked
nothing.
in. Right.
We tapped out of
Nothing.
sports, man.
I'm looking forward to getting back into it. Really looking forward to, you know, March Madness coming up.
Oh,
That's
all
an
right.
annual tradition for me and the guys. Look forward to fantasy football again next year, after COVID forcing the year off. And yeah. So I'm totally. I love listening to you guys talk about it, because it kind of
Right.
like, you know, gives me a little bit of an update. But you know, I'm totally not in anything right now.
Yeah.
You
I
gonna
was
say?
gonna say I was thrown off this year because I'm usually able to, like, of course, when I'm not playing you, like you're one of
Hmm.
the guys that I go to and vice versa. So it
Yeah.
was kind of like another resource that I was missing this year to
Yeah.
run things
Yeah.
by. So I
You
Yeah.
mean,
know,
Well, now I'm your stock bounce off guy. So
yeah,
tap
for
out.
sure, I'll take it.
You know
But
what's
that's all right.
crazy?
We'll be back at it. And come the summer.
Yep.
You know what's crazy? Look, like I think as I got older, I'm just so tunnel vision when it comes to sports. Sports is just like I care about San Francisco. Everybody else I don't care about, right? It's just San Francisco's in NFL, unless I'm thinking about a player for fantasy football. That's where it changes. A player I
Yeah.
know about that, all that, you always know that, but I don't care about teams. Basketball, it took me about a year to realize this, how I can play it all day, and I do, but I really don't care about a game. So like I don't care about, like, I didn't watch the bubble. I watched the bubble a little bit to see how it was gonna be. It was great. I really didn't watch the finals. I don't watch so much of the playoffs. I just didn't care. And I'm like, damn, is it me? I'm like, am I losing something? I'm like, you know what? I think because I have so many things going on and the world is so different right now that I'm not even thinking about that. Like I'm like, oh, by the way, a game is on right now. Oh, okay. I'll check the score, but I'm not really watching the game, you know?
Yeah.
So I think
Yeah.
everybody's kind of
Absolutely.
like that. I think everybody's kind of like, hopefully we can get back to like sitting down and like going to grab wings and watching the game. But
Yeah.
I think right now
Yeah.
we're not even focused on that.
Yeah.
No.
Yeah. Listen, the mentality in 2020 was totally different, and you know, we people just, life was too real to to, it's unfortunate too, because, sports are in many ways an escape. You kind of get away, you can get lost in it, the way you might in music, but I think, Derrick points out that a lot of good music came out during this year. I think it was probably an up year for some of the music stuff, but a down year for sports. At least it felt that way to me. But again, I was kind of, once the COVID stuff and the cancellation started happening, I almost completely checked out from
like here we go.
I was like, Derrick was like, yo, you got to text me the player you want to sub in and this and that. I'm like, oh, man.
When he sent that out, I was like, listen, man, you need to switch it. I said, switch from Yahoo to something else. I'm like, don't worry about that. Cause when we in the other league that we're in all together, no one asked me that one time about switching him out, because it was already had a COVID list. So it was like a COVID list to be there. You push the guy down, and that's it. I was like, that's too much work. I'm like, to me to worry about switching a guy out, what points count to what? I'm like, I don't care, man.
Yeah, you know what? It ended up being. I mean, after that first, I guess I don't know if it was like the Pittsburgh, Tennessee thing, Chiefs thing. After that, it was pretty smooth, surprisingly.
Yeah. I think the first few weeks, right? First few weeks, and after that, calmed down. Yeah.
And after that, they were like, "Yo, if you don't have a quarterback, then go get a receiver to play quarterback."
You know what? I think the NFL needs to get more kudos for what they're doing, because you look at the NBA, right? The NBA, you have all these COVID things that happen, cases that pop up. You don't really hear too much about it. It's like, oh, swept under the rug. NFL, when something goes wrong in the NFL, everyone is blown up out of proportion, I feel. So I think Goodell did a real good job in his facilities of locking that down. You didn't have that many guys missing on the COVID list. You didn't have Tom Brady missing the game, I don't know if that's more of a team thing or a player thing or a league thing. I don't know who, but they had him on a short leash out there.
They did a good job. But they did a good job in the bubble too.
Yeah, but see, that's what I'm saying. The bubble they did, because they were confined. You can't Disney World. Mm-hmm. You know what I'm saying? But the NFL, you're going home. You're leaving, going home, chilling with your girl or your kids or your wife or whatever you're doing, hanging with your boys, whatever, and you still not getting no positive tests. You know what I'm saying? Which is
they did a good job with that.
Mm-hmm.
All right. We're gonna end. You know how we end it, right?
Yeah, rapid fire.
Rapid fire. You got the rapid fire. Everybody. Yeah. We know we did the last episode all rapid fire. That was fun. I'll start it off. All right. All right. One's got to go. Wu-Tang 36 Chambers or Aquemini. One's got to go.
Damn. They're picking between the kids, man.
I'm going for the juggler from the rip.
Yeah, he didn't even give me a warm-up.
Yeah. I gave him a little bounce pass. Give it alley-oop right away.
he ain't even stretch.
He didn't even stretch yet.
Yeah.
You never even heard of it. Someone mentions the other album to you, you just who?
Well, I guess based on that and watching the most recent episode, Aquemini is gonna have to go because 36 Chambers sparked, everything that came after it. So if you're looking at legacy, it's like when Vaughn was talking about Rose. I was like, no, you can't get rid of it. You can't. You got it. If you look at it in totality, everything that came with it, I got it. 36 Chambers. Listen, I love a lot of the Outkast albums, playlist.
You can always go back to something else.
You always go back to the other stuff. 36 Chambers started it all. But if you ask me which one I'm popping in right now, it's Aquemini.
Exactly. So think about 36 Chambers. If they make that album, they could have been locked up or something like that. They were wild out there.
Well, I'm sure they're picking that album.
that changed their whole lives. All right, I got a movie one for you. All right, a better movie: Boiler Room or Wolf of Wall Street?
Oh man, you guys are tough.
Boiler Room is dope.
Yeah.
You know what? I don't know if I saw that one, but Wolf of Wall Street is a different level for me, though.
Yeah.
You never see Boiler Room.
I got to tell you, Wolf of Wall Street was a little too raw for me,
Okay.
I think that was I could watch Boiler Room with the kids in the house. You can't watch Wolf of Wall Street with the kids.
Wolf of Wall Street is different.
Yeah.
Right.
Boiler Room is an interesting movie. Derrick, you haven't
Gotta
seen
check
it.
that one.
Yeah, I see
Vin
that movie.
Diesel's in that one.
Vin Diesel's in that movie. Yeah.
Okay.
Yeah, I'm gonna go with Boiler Room.
All right.
All right. So we got I don't know if you were on the chat when we had this conversation. Vin Diesel's in Fast and Furious, correct?
Yeah.
Mm-hmm.
I've never seen a movie with Vin Diesel in it ever.
It's like almost impossible. Like,
I looked through like his Wikipedia just to be sure, and the answer is no.
That's crazy.
Yeah.
That's crazy.
So I haven't seen Boiler Room. I guess maybe I need to check it. All right. I'm gonna put you on this one since Vaughn stumped me with this one last episode. Big or Hove?
Yeah, I you know.
Anytime they hit you with, you know.
Yeah. It's interesting because, you know, Big had 2 albums and they're both absolutely amazing.
Right.
It's hard to argue with that. But then you look at, you know, years and years and full body of work, and I think you gotta go Jay. Although I will say, probably unpopular opinion, I'm all good never hearing a Jay album after the Black Album.
That's what
I'm all set after that.
I've been saying that since 04.
Yeah, I'm all good. Actually, when he went out with that album, I was like, man,
It's perfect.
I was like, he knows how to do everything the right way.
It's like Jordan with the last shot. It's over.
Yeah,
98.
and that's why, you know, I don't know what the story is with Brady because I'm not following anything, but I hope he just goes out now. Just go out on top.
He wants to come back for the 8th. Because you know what someone said? It's funny you said that because they said the reason why Brady, the thing is that he loves, like when you love doing something, you keep on doing it so you can't do it anymore, right? So I don't care if it's work or if it's music, whatever, artist, right? So as long as he can play football at a high level, he's going to keep on doing it. And we should just say, all right, keep doing it. Because once he stops doing it, what's he going to do? Right. He has all the money. He can do whatever he wants, but sitting on the beach for 16 hours isn't fun. You know what I'm saying? Like it's relaxing, but he's going to get bored. So let him keep going as long as he doesn't get hurt. But eventually, you know, Father Time's going to come knocking on the door. And I think he wants to do a 2-year extension.
Man, he could just go out on top. In like, I mean, that is the epic mic drop right there. He left Billy B, did his own thing, got a chip. Come on, just go. The same way Hove should have just Black Album out. Just go.
Look, and I love Hove, and people always say, I'm glad you agree with me, Luke. I'm like, I love Hove to death. He's one of my favorite rappers, but I don't have to hear him rap anymore. And people think I'm dissing. I'm like, no, that's not a diss. It's just like, I'm good. I have heard everything he can tell me. You know what I'm saying?
Listen, he said it himself. You want the old Hove, buy my old album. Like, that's what I'm doing. That's all I'm doing.
That's all I'm doing. I got a rap one for you. All right, better storyteller. Nas or Slick Rick?
I'm going Nas. I gotta go Nas. I love. Come on. I feel like what's the name of the song? Undying Love or whatever. Yeah. I mean, he might just take it with that one. I love that. I mean, it's such a good. Yeah. I'm going Nas.
I ain't mad at that.
I don't know what my answer is, but Slick Rick had like kid stories. He had.
yeah. Well, that was his thing. You know, that was his thing. Yeah. But I mean, if you ask me about the intricacy and the, you know, again, it goes back to you combine everything, the way the delivery is and everything. I mean, I'm going with
All right. So here's the final one, right? You get to keep one stock. What are you keeping?
Just one.
See, I know him too well. I know him too well. So
forever.
You got one. You forever.
Yeah, ever.
Wow. I mean, forever, I would have to go with Amazon. I'm not counting like QQQ or any like that stocks because those change over all the time. If I'm keeping one company now for forever, I guess Amazon. I mean, it's hard to see them.
I mean, they're wiping out retail stores by the second.
Yeah. And they have Amazon. They have Amazon Web Services. There's layers to that company, and they're always innovating, and it's hard to see how anyone's going to stop them short of some kind of regulation, something coming down from the government. So yeah, I'm going to go with Amazon. Not financial advice.
All right. I got a fantasy football question for you.
All right.
So this is all in theory. Because these people probably were at their apex when we weren't even playing fantasy football. But who do you think would be a better fantasy football running back? Barry Sanders or Bo Jackson in their prime?
Wow. I tell you, I mean, Barry was so exciting to watch, man. I feel like you'd want that guy on your team just for that excitement. I mean, it's like having Tyreek Hill on your team, you know. And any minute, any minute, you could be up 25.
But Bo, like that. Barry.
I would go Bo because I could see Barry had like great runs. Like I could see Barry like you're up 1 and Barry tried to do a crazy run, lose 12 yards and you lose the game.
yeah. I hear you.
That's what I'm worried about.
Mm-hmm.
You know what I'm saying?
Yeah.
So and they showed him do the crazy runs, and he had the baseline. He didn't have a great line. He didn't have any of that. But like they don't show the 7-yard losses because he didn't always. The
same move didn't always work.
Exactly.
Didn't always work. Yeah.
Yeah. Now if you tell me you gave him Emmitt Smith's line, like that's a no-brainer where I'm going.
Yeah.
I love which one? Yeah, pick one.
Yeah, I don't know. I know myself. I like those. I like the flashy guys that could give me 20. I'm going Barry.
Nothing wrong with that. You can't lose with those.
No. Anyone but Cole Beasley, Derrick. Anyone but Cole.
Bizzle put some work in this shit.
Yeah, I heard.
Yeah.
I heard.
Yeah, like he almost had like 90. Yo, he was all pro this year.
Guys, always puts up numbers except when he's on my roster.
Yeah, 2 catches, 16 yards.
Exactly. Yep.
Yeah. But yeah, man, pleasure. Go ahead. What you about to say?
I'm gonna say any parting words, any parting stock advice, or some people need to look out for, that you can give someone.
You know what? Listen, in terms of stock, the parting words would be, just be careful out there. I think there's the stock market is great that everybody's getting into it. I think long-term people should, definitely read up a little bit. Be careful with your sources because, like in any kind of business where there's a lot of money to be made, there are a lot of shady characters out there, a lot of people selling you stuff and always, risk management is first, just kind of think about the downsides first before you go dreaming about, turning, $1,000 into $1 million, right? So that would be the parting words on that. As far as other parting words, I love this show. I love what you guys are doing. The content is phenomenal. It's fantastic. I look forward to this every weekend. Keep doing your thing, guys. You always have my support.
Appreciate you, man.
Yeah. So wrapping it up with Luke, man. Appreciate it.
Cool hand, Luke.
Yes, sir. I like the beard, man. You look like you about to slam somebody.
I'm about to go Ryan Fitzpatrick with it.
Yeah, let's go.
Bring it down.
I'm taking advantage of the mask,
for sure.
Knows,
it's magical.
The mask all day.
Right.
My wife said, Captain Jack Sparrow, you need to cut that.
All right. Well, I want to thank everybody for listening. I think this is a great episode for people looking to get into stocks, things like that. So shout out to Luke. Appreciate y'all. Y'all know where to find us. You can follow us on IG at The Great Minds Podcast, Twitter at The Great Minds P1. Thank you once again.
Great Minds Think Alike. Great Minds Podcast. Great Minds Think Alike. Great Minds Podcast. Great Minds Think Alike. Great Minds Podcast. Great Minds Think Alike. Let's rock. You're now tuned into the Great Minds Podcast. 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 Everything Vaughn, oh boy, like Cam on a song. Culture safe now, thank God. The panic is gone. Time to heal from the pain. Take the bandages off. You gotta win. The stakes are high like a cannabis bomb. Okay, it's game time. Picture with the balls. That's a FaceTime. Great minds spreading faster than a rumor through the grapevine. Vaughn and Derrick deserve the merit. All salute. It's more than just a podcast. Show it's like a movie. Vaughn and Derrick, what up? Great minds think alike. It's the Great Minds Podcast. Great minds think alike. It's the Great Minds Podcast. Great minds think alike. It's the Great Minds Podcast. Great minds think alike. You're now tuned into the Great Minds Podcast. Podcast. You now tuned into the Great Minds Podcast. You now tuned into the Great Minds Podcast. You now tuned into the Great Minds Podcast.